It's been a brutal year for startups, with more companies struggling to raise money and hundreds shutting down altogether. Fresh capital from venture investors and bank loans is scarce and expensive. Going public is nearly impossible. Some business models that worked when cash was cheap are unsustainable now. This means venture backed startups are running out of money and facing hard choices. So far in 2023, 19% of all startup funded rounds raised money at a lower valuation for the company than they'd previously been awarded by investors. That's up from just 5% in 2021, according to data from the equity management company Carta Incorporated. Peter Walker, Carta's head of insight, credits rising interest rates, which proved to be a problem for the startup economy. The beginning of 2023 was marked with mass job cuts and plummeting investments, and many venture capitalists warned companies would be forced to take lower valuations as the year continued. Artificial intelligence seemed the only bright spot for startups, with funding for related companies rising above every other tech category and reaching $17.9 billion, according to data from PitchBook. So far this year, 543 startups shut their doors due to bankruptcy or dissolution, according to Carta. The third fiscal quarter saw 212 shutdowns, the highest number since the firm began tracking the data. Last year, 467 companies folded. Larger shutdowns could put further pressure on venture returns that have been falling overall. The yearly internal rate of return for venture firms was negative 7% in the third quarter of 2022, the lowest value since 2009, according to PitchBook data. In recent months, several companies that raised significant venture funding have folded, including biotechnology company Goldfinch Bio, wine business Underground Cellar, and fintech company Plastic. California startup Zoom, which was developing a robotic pizza maker and was once valued at $2.25 billion, recently entered a wind-down process handled by Sherwood Partners, a restructuring firm, according to Sherwood's co-founder and co-president, Martin Pitchinson. The venture capital boom in 2021, as well as pandemic-era government funding for small businesses, likely kept businesses alive for longer than they would have otherwise, some observers believe. Now that those funding sources have dried up, the failures are coming in. Barry Callender, president of Callender Group, which provides corporate restructuring and dissolution services, said that most of the companies that they are handling now frankly deserve to have gone out of business a year or two ago. Venture-backed businesses in the U.S. raised $346 billion in venture capital in 2021, according to the PitchBook NVCA Venture Monitor report. Investors and founders say many are still surviving on that for now. Some hope that they will be able to get through to a time when the market rebounds and they can consider tapping public markets. Technology stocks have started strengthening, with the NASDAQ Composite Index up more than 26% for the year as of Thursday afternoon. The venture market, meanwhile, has been declining. Startups in the U.S. raised $37 billion in the first quarter of this year, down 55% from the first 3 months of last year. The longer the venture market stays depressed, the closer many startups will get to the moment of truth. Still, many investors say that there's a silver lining for the startup industry in the throes of a bust. The increase in down rounds could mean that towering valuations are coming back down to earth after reaching unrealistic highs during recent years' pandemic-fueled boom. Founders will also be forced to operate in a more frugal economic environment, encouraging more discipline and restrained spending. Colin Plume, CEO of Noble Gold Investments and host of the Self-Made Millionaires Tips podcast, sat down for an interview with SaaS company venture capitalist Jay Levy. Unlike many other VCs, Levy has developed a process in screening founders and startups, but even better, he has a clear path to success. If you have a SaaS startup, click on the link above or on the description box to watch the interview.